So I shall seamlessly take over this demonstration of World Bank IFC collaboration here. You've heard about what we do from Catherine's presentation in the PPP advisory department. We do a lot of work in the water sector. I'm a water sector specialist and working mainly in sub-Saharan Africa. We're talking I think earlier today we were talking about much larger, more traditional types of PPPs. I think it's important to recognize that these are very different types of PPPs. As Vicky was saying, it's a small entrepreneur who's seen a business opportunity and they've entered the water sector. So it's a very different environment and different players that we're talking about. And it's been the growth of this, the growth of small-scale water PPPs has been a very organic one and a natural one. It's not grown out of, say, the more traditional route where government takes a decision to move to a PPP and it takes a policy decision to move forward. It's very much grown organically that systems are just not working. When we say 800 million people don't have access to water, they're not dying of thirst, they're getting their water from somewhere and they're buying it from the guy next door or the person down the road. And I think in the last sort of 10 years, we've really seen an evolution about how we deal with the private sector in this space. I think it used to be that these are the bad guys who are charging too much money for poor quality water and need to be pushed out of the market, and that everyone should have safe piped water from the established utility. Whereas now I think we're realizing that's not going to happen for the next 20 years. How do we harness this kind of entrepreneurial spirit, and how do we really make sure that these people are providing good service at an affordable price? So I'm just going to talk about two examples of small-scale PPPs. Well, the first is an example from Uganda where we worked with the government on developing PPPs for small towns. And the second is, hopefully might come back to this conversation we had about conflict states. We've been asked in South Sudan to come and look at the water sector there and see what opportunities there are for PPPs there. So just briefly, two examples of the work we're doing in the sector. So Uganda has a very long history of PPPs in the small towns. The larger towns are covered by the National Water and Sewage Company, which is a public utility, but smaller towns have been contracted out to the private sector. Sort of over the last 10 years, this has developed. So there's now a very well-established market with about 80% of small towns being managed by the private sector. The types of contracts these are generally management contracts, and as Vicky's found in her work, this is generally the case across many of these small towns, where the government or a donor may come in and build the infrastructure, and then it's handed to an operator to operate and maintain and manage. Tariffs are often regulated in the sector, as in Uganda, so it's kept to a level that they cover operation and maintenance, but not necessarily the capital investment, which can constrain expansion of services if you're always relying on an injection of funds from donors or from government. So within this environment, a sort of well-established environment, IFC was asked by the Ministry of Water to come in and support the development of new types of contracts in these in the water sector. In 2010, we did a review of a number of towns and eventually closed a transaction in the town of Busambatia. Busambatia is about 2 hours drive away from Kampala, as I know, because I was there last week. So the after pictures are hot off the press. It's a town of around 15,000 people. Previously, they had a very small, very low coverage. People were having to walk long distances to access public stand posts. And there was very inefficient and intermittent supply. So what we did, we worked with the government and to develop a new type of contract to look at how we could help strengthen the PPP arrangements there. I think some of the key features that were involved in there was to extend the length of the contract. Often contracts are kept very short, say 2-3 years, because governments aren't willing to give out longer-term contracts in this space, but that's generally not long enough for the private operator to recoup any costs that they might have invested. So that was one of the innovations of the project. The second part was to try and build in some of the capital investment in the PPP structure. This was, Vicky mentioned the Global Partnership on Output-Based Aid, and who financed some of the investments here. And in short, the way they operate is that the private operator is paid on delivery of service and on sustainable service. So rather than paying up front, which is a traditional public procurement, you pay at the end when the service is delivered. A very traditional PPP arrangement, really. But this is not one that's really been tried in many developing countries, because they've stuck very much with a management contract type model. So this meant that these small operators had to access finance, and it's important to know that often these private operators don't have deep pockets or access to finance. The banks don't understand the business. You have a very short-term contract. You don't own the assets, so you have very little to borrow against. And the bank doesn't understand you, and you aren't necessarily able to put together a business plan or a case to the bank. So often these operations are very much being financed by the operators themselves rather than through private finance. So in this, as part of the transaction was some complementary work that we did, working on access to finance and really helping the banks and the operators understand each other. And as a result, the operator was able to access private finance in advance to pre-finance the construction that was then repaid on the output-based project at the end. So this was very much trying to transition away from just purely a management contract, but more to a contract where the private sector took more of the construction and financial risk of the project. So really trying to develop the forms of contract that were being used. And in terms of the physical outputs, over 400 connections have been built, and the whole town has fairly good coverage of water supply. So it's been a positive in terms of development impact of the project. So just briefly to go on to another very, very different environment and a different example. We were so moving to South Sudan, which is probably is still the newest country in the world, which only became independent in 2011. In terms of the water situation, very, very poor coverage. The national utility covers less than 20% of people in 6 large towns. So the environment is very much outside of this. So within this context, the government asked us to come and see what opportunities there were and how IFC could work with them to develop PPPs. And I have to say, no one was more sceptical than me about what we could potentially do in a country like South Sudan, which just coming out of conflict and a very new country. So I think what was very interesting, we've done a preliminary study and we're thinking about how we can move forward. So this is very early days. We haven't done a transaction yet, but it's very much thinking about what we could potentially do in the country. I mean, I think what we found really was that given the lack of any kind of public sector financing, public sector delivery of service, the private sector has really stepped in. And there are hundreds of trucks and donkey carts like the ones at the top where people are delivering water to people's houses. There's also, but it's this very unregulated market, so you're very unsure about the quality of the water that's being provided, and also it's very expensive, over $8 to $12 per cubic meter, which is hugely expensive, and often means that people have to resort to very, very unsafe sources. So I think this actually brings in a very interesting opportunity for us, is that actually basically the private sector is already delivering the services. So how do we move from this very informal, unregulated market to transition to one where you could try and they're delivering good service at an affordable price? So that's one of the opportunities. I think we were quite surprised to find that there was a lot of appetite, a lot of interest in this kind of approach. So just briefly on the enabling environment in South Sudan itself is, while they have a national policy to promote private sector for these small services and small towns, it's not been enacted into law. There's very, very little capacity of the government to really outside Juba to implement anything like this. There's lack of clarity in role, so who's responsible? The national government, some policy says it's the national government, other policies say it's the state government. Well, how do you balance that? Land is a very big issue, and as I said, the real challenge is how you harness this informal market to deliver good services. And I think, so as I said, this is early days, this is an initial study that we've done, but I think in this kind of environment, I think we're really looking at a kind of learning by doing kind of approach. We'll take a very small scale, town and really see how we can work with the operators who are already there and develop a form of PPP in the country. So just to summarise, so when you have a very clear, well-established policy environment, I think the challenge is moving away from the more traditional public procurement that you might have had in a country like Uganda, whereas in an emerging market, a very emerging post-conflict market, you have very weak capacity and very unclear roles and responsibilities, but then there's something to harness and we can move forward. I think we're looking at it two directions. We generally look at PPPs as a public service that's been given away to the private sector. But in somewhere like South Sudan, it's a public service that's being brought back to the public sector.